Hello and welcome. This is June Collier from Make Your Money Work for You. In this short training, I will share with you some simple investing lessons that you can use immediately. This video will give you a game plan that you can implement without having to know a lot about investing. The Before You Invest series are important lessons. Do not skip these lessons on your way to becoming an investor. Again, my name is June Collier, and I'm an investor and personal finance trainer. My goal in this course is to teach you some extremely simple investing strategies that can be applied to your finances today. These strategies do not require any learning beyond what you have already learned in this video series. Company 401k or 403b. If your company offers a 401k or 403b retirement plan, this can be by far the easiest way to get started investing. These plans are often tax deferred, or if you go with a Roth option, can be tax-free upon withdrawal. If your company offers a company match on your contributions, this could be a huge opportunity to grow your investment by capitalizing on your company's generosity to match your retirement contributions. The next best thing is automatic investing. With these retirement programs, the money automatically comes out of your paycheck each pay period, so you don't actually see the money. There's nothing better than setting up an automatic investing plan, and a 401k or 403b is the best way to do that. Finally, some companies offer discounts to their employees who purchase the company's stock. This can be another leveraging point. Be careful not to put your entire nest egg in your company's stock. But receiving a discount just because you work there isn't a bad deal if the company stock is growing. Open a brokerage account. Opening a brokerage account is the first big step to jump-starting your investment journey. A brokerage account is an investment account that you can use to buy stocks, bonds, mutual funds, ETFs, and other investments. There are several different types of brokerage accounts available. They mostly all work the same. Some of the more popular brokerage accounts are Charles Schwab, Fidelity, E-Trade, and TD Ameritrade. In the last few years, other companies have come into the industry, giving investors additional alternatives to buy stocks. Those names are names that you may already be familiar with, such as Robinhood, Stash, and even Cash App. However, if you're going to trade stocks, I would recommend one of the traditional brokerage companies because they offer more features and research tools. Set up automatic investing. An automatic investment plan is an investment program that allows investors to contribute money to an investment account at regular intervals to be invested in a preset strategy. Funds can be automatically deducted from an individual's paycheck or paid out from a personal account. People who set up auto invest usually do so to satisfy a long-term investment goal, and growth is usually a good fit for people with the long-term goals in mind. Many brokerage accounts offer automatic investment plans, but they're often limited to the brokerage's mutual funds. However, contact your brokerage's customer support to find out how they can accommodate automatic investing of stocks and ETFs. Buy the entire market. Stock investing is filled with intricate strategies and approaches. Yet some of the most successful investors have done little more than stick with the basics. That generally means using exchange-traded funds, also known as ETFs, for the bulk of their portfolio. Warren Buffett has famously said, a low-cost S&P 500 index fund is the best investment most Americans can make. The S&P 500, or Standard & Poor's 500, is a stock market index that measures the stock performance of the 500 largest companies listed on the stock exchanges in the United States. It includes companies across 11 sectors to offer a picture of the health of the U.S. stock market and the broader economy. The S&P 500 has delivered average annual returns of almost 10%, going back 90 plus years. Some popular S&P 500 indices are Fidelity 500 Index Fund, ticker symbol FXAIX. Schwab S&P 500 Index Fund, ticker symbol SWPPX. Vanguard 500 Index Fund Investor Shares, ticker symbol VFINX. Spider S&P 500 ETF, ticker symbol SPY. And Vanguard 500 Index Fund, ticker symbol VOO. Play the long game. The best thing to do after you start investing may be the hardest. Don't look at it. That's, of course, unless you're trying to beat the odds and succeed at day trading, which requires that you actually start learning about trading and how to pick individual stocks. It's good to avoid the habit of compulsively checking how your stocks are doing several times a day, every day. That will drive you bananas. The key is to think long term. Fretting over daily fluctuations won't do much for your portfolio's health, neither yours. There will, of course, be times when you will need to check on your stocks and other investments. If you follow the steps in this video, you will only need to revisit your portfolio a few times a year to make sure it's still in line with your investment goals. If you're approaching retirement, you may want to move some of your stock investments over to more conservative fixed income investments. In summary, investing does not have to be complicated. In fact, if you have no desire in becoming the next Warren Buffett, you could actually take a piece of advice from the Oracle of Omaha. At his company's first ever virtual annual meeting held on May 2nd, 2020, Warren Buffett said, "In my view, for most people, the best thing to do is own the S&P 500 Index Fund. The S&P 500 Index Fund has delivered average annual returns of almost 10% going back 90 plus years. Because the S&P 500 invests in the broad range of the 500 largest companies in the U.S., you don't have to pick and choose hoping that you're going to pick the right individual stock. This gives you complete diversification with a good mix of companies. As long as you're investing over the long period, you should not worry too much about the short-term volatility spikes the market experiences from time to time. Your goal is long-term, and short volatility is rarely an issue. Finally, index funds have lower fees, and fees matter because they can cut into your overall return. By not paying a lot for someone to pick and choose your investments, you get to keep more money to reinvest in your portfolio. Thank you for watching this short presentation. You now have a basic plan that can be immediately implemented, and if followed, will build a solid financial portfolio without you having to be a stock market genius.